you the top stocks
for the new summer.
Get the long view on Sal Mubarak.
Learn how to let your money do all the work.
Thank God it's Diwali. Catch up with the bulls, the bears and all the other animal instincts
At our
Diwali party.
Take a different approach to Lakshmi Puja this season.
Join Bloomberg Quint.
For a rich life and a life full of riches. Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali.
Your chance to get some personal advice from veteran investor Ramdev Agrawal.
Investing is about buying the right asset class at right price. I have been able to create good amount of wealth through my career by believing in power of quality, power of focus and power of compounding. I will share all my experiences with you.
Write to us now or send in your queries on our Twitter and Facebook pages. Watch me live in conversation with Ramdev Agrawal.
Ask me what you want to know from me. Only on Bloomberg Quint.
Good morning, happy Dhanteras. This is Bloomberg Quint Live, India's first live streaming business news service. I'm Menika Doshi.
Well, happy Dhanteras to all our viewers and to Menka and Ira. I'm Neeraj Shah. Good morning.
Good morning. I'm Meera Dugal. These are our headlines. Commodity prices rally after strong Chinese factory data and Janet Yellen's latest comments. Copper hits a 3-year high. 5 bidders express interest in acquiring 30% stake in Jaiprakash Power. Higher costs are expected to dent Bajaj Auto's performance in the second quarter. And a lower base may aid Axis Bank's bottom line in the second quarter, but asset quality pain may linger.
Well, those are the top headlines. Lots of newsmakers during the day as well. But let's quickly tell you about the trade setup for this morning. Bring up what the rest of the world is doing. Bring up what Asia is doing and the SGX Nifty as well to just give you a brief indication of how we may start off. Not the best today, but well, we've had such a good run the last few sessions, and yesterday kind of gave an inkling of how nervous the market is at these higher levels. We'll start off on a slightly flattish note, but nothing to complain. A lot will depend on what the rate sensitives do. So yesterday was chalk and cheese in terms of rate sensitives moves. Autos zoomed ahead in the second half, and that came to the rescue of our markets, and which is why Nifty Auto ended up 1.25%, and a lot of stocks from M&M to the Tata Group stocks to a bunch of auto components did extremely well. No apparent reason, but yeah, autos came to the rescue yesterday on a day when both Reliance and the Nifty Bank, heavyweights in their own right, did not do well. It was a lackluster performance by Nifty Bank after a really long time. Reliance came off from the highs of the day as well, and those were the principal reasons why after the index starting off really well, came back in the second half of trade. Whether that can continue remains to be seen, but the Nifty Bank has to participate. I repeat, every single day, the Nifty Bank has to participate at these heady levels for the market to do well. I think an eye on Q2 earnings today. 4 large names, a bunch of reactions and a bunch of mid-cap names coming out. During the market hours, you'll probably have Bajaj Auto, but post-market hours or maybe during the dying moments, Axis Bank comes out with numbers, Wipro towards the second half of the day. So I think it's an earnings heavy day and it's an earnings important day. So do watch out for all of these. In terms of stocks to watch in the session today, I think one, Bajaj Auto, as I said, during market hour results. So that is an important one to watch out for. Sometime around noon when we get an indication of what Bajaj Auto would do. It's a stock that has done really well. The management now needs to deliver on the numbers and the commentary. So that is important. Mid-cap IT guys, and we getting positively surprised by IT results. Sasken came out with a blockbuster set of numbers. Persistent Systems, quarter-on-quarter 10% growth on the profit numbers. EBITDA margins moving up should all help this mid-cap IT name do well too. Cyient we've seen do reasonably well. So amidst pockets of outperformance that we may be watching out for, not index moving, but mid-cap IT could be it. And a bunch of mid-caps and small caps which will react to fund action. So Ares Agro, IFB Industries, some key names have taken small stakes out here. Vijay Kedia, the name evokes reactions. Watch out for this one in today's session. Let's see if it reacts. Let's see if Jwalamukhi's buying into IFB Industries brings about a reaction thereof or no. So a lot of mid-caps will be in focus today in terms of stock reactions, but it's an earnings-heavy day on a truncated week, so important one to watch out for.
All right, let's get you all the editorial stories on First Word this morning. Some green shoots may be visible in Mumbai's realty sector. We'll tell you why, with 5 players showing interest in picking up a stake in JP Power. Should its lenders breathe easy? That's the second story we're covering this morning. And Xi Jinping is expected to emerge stronger from the 19th Communist Party Congress meeting, which begins tomorrow. But what's uncertain is what he'll do with that enhanced political clout. We've got all the news across the world covered this morning. Here, you want to kick it off with that news break that Vishwanath had last evening on 5 bidders interested in Jaiprakash Power?
Yes, so I think the stock was higher as well, about 10% in trade yesterday. By the second half of the day, news had emerged that there is a short list of bidders. Actually, initially when this asset was put up for sale, there were almost about 10-11 people who had expressed interest. And now when it comes down to the non-binding bid stage, about 5 companies have submitted their bids. First, let's listen into Vishwanath, who broke and reported this story yesterday evening, then discuss the implications.
The stake sale process for Jaiprakash Power Ventures Limited, where the lenders to the company were looking to sell about 30% equity stake, has found 5 bidders. Now, these 5 bidders include Edelweiss ARC, Brookfield, Resurgent Power, India Power, as well as JSW Group, who have all submitted non-binding bids to SBI Caps and EY, who are running this wholesale process. Now, if you remember, in August, the lenders had appointed SBI Caps and EY to run the process and to find probable buyers for this particular case. Now, in the Jaiprakash Power's case, Jaiprakash Power Ventures case, the lenders own about 52% equity stake, and they are allowed to sell this in 2 tranches, the first of which is about to be 30%, as we all know. However, now that the bids have been submitted, the lenders will go through it and will shortlist some probable buyers who will then be allowed to look at the company's books more closely. The success of this sale process will be very important for a banking system that is still struggling with resolution of bad loans. The total gross non-performing assets of the banking system has crossed over 8 lakh crore in June and is expected to worsen in September.
All right, that's Vishwanath detailing who's in the fray. In a couple of points as to why this is important. One, this is a power asset. I think the general expectation was that steel will get interest, and reports have suggested that steel will get interest, power will not. But this has. Not to say that you can directly equate this power asset to the ones that have gone into insolvency, but still good to see that there is interest. Also, the parties that are interested is interesting. Brookfield, Resurgent Power, which was the Tata Power, ICICI Bank Power investment platform, is coming in and making a bid. Edelweiss ARC continues to be active, and of course there are a couple of strategic players like JSW Energy as well. So anything you can get off your hands right now is great. Bankers have had a good run with JP assets, so they've got the cement sale done. Now if they get this done, certainly good news for ICICI, which has been the lead lender in most of these.
Yeah, I mean, you've got to give it to JP for consistently being able to at least make the best effort possible on selling off assets and trying to return some of this money, which we haven't seen many other large business groups in this country do. When does this wind up? When do we know whether it's been successful or not?
This is non-binding bid stage, so the process.
So we still have a few months to go with this. All right, so that's the power story that will play out. As Zero pointed out, the stock already, I think in anticipation, reacted yesterday of some resolution to this process. So
it should be interesting. But speaking of companies which are reacting, I mean, yes, JP Group stocks have been, but guys, Mumbai real estate, what's happening? We're talking about nobody buying flats, but Mumbai real estate is doing really well. Yesterday, almost all of these names, large names, hit fresh highs or almost close to fresh highs. So, and the price action got me thinking as to what could be the reason. Sorry, you have a smile on your face. You want to?
Yeah, no. Anyways, please continue.
Okay,
please.
fair call. So I just thought I'll gather a few points as to why, or what could be the possible reasons why these stocks are doing what they are doing. Some factoids here. So speaking to 2 or 3 developers as well yesterday, and a couple of fund guys. So commercial real estate leasing in Mumbai has picked up dramatically in the last 3 to 6 odd months. In fact, there was a CLSA report which I referred to as well. And vacancy rates in A-grade office spaces are now at 18%. They were substantially higher in the month of March. So in the last 6 months, the vacancy rates are filling up. or they are going down, and leasing is picking up and happening at a better rate. So that is the commercial real estate side of Mumbai. We are only talking about downtown Mumbai and suburban Mumbai, not really going out to Thane region. This is only Mumbai that I'm talking about. Almost everybody across the street is of the opinion that the new RERA guidelines are supply deflationary. And that's true, because we've seen a bunch of developers who had large plots marked for development over a 5-year period. Now, because they have to adhere to the delivery guidelines, have cut the plots into two and said, okay, we are not developing plot 2 right now, just looking at plot 1. So the anticipated or a potential supply, as people take into account 3 years, 4 years hence, has come off dramatically in Mumbai. That is point 2. So people do feel that previously the talk was, so much of supply coming into the street. Now that has gone down. And companies are investing, counter-cyclical as it may seem, into large residential plots as well. Oberoi being one in Thane. Marathon Next Gen has bought something in Mulund. So a bunch of real estate companies are doing this. Now, as a result of that or otherwise, you look at the performance of some of these Mumbai-based real estate companies, not looking too far off, but only in October. Marathon Next Gen, unlisted, or rather listed, stock up 30% in the last 12 days. Kolte Patil, which has got 2 triggers by virtue of the Bombay revenues that are starting to get recognized, up 25%. Oberoi Realty, 15%. Godrej Properties, which is traditionally traded at a premium to all of these players, also trading up 5% in the month of October alone. So these stocks are moving up. Now, you can argue that infrastructure projects are leading to this, or whether vacancy rates coming off is leading to this, or it's a whole host of factors. But something's happening out there for people in the markets to go out and start buying into these stocks, and in a big way.
Actually, on commercial realty, I mean, I'm not sure this is only Bombay specific, because some of the real estate consultancies have started talking about the fact that the cycle is again turned in commercial real estate. We had a long period of few years where there was very little incremental supply coming in, and that was because we had an oversupply period, usual cycle. And they are now starting to talk about how new supply is going to start coming in. New launches are starting to pick up in commercial real estate, which is a turn of a cycle. So if that continues, certainly from the commercial angle, it's important.
Yeah, maybe also partially contribute. Remember the conversation we were having with Prestige last week, right? And he said, yeah, the first 2 months after RERA have been tough because we had to register all the projects, etc. But we're finally getting the hang of it, and I think things are looking up. And he said that there were no sales in the first 2 quarters at all. But now, finally, 3rd quarter onwards, they're hopeful that no launches, rather. No launches. And they're hopeful that 3rd quarter. Now, of course, that's a completely different geography. I'm not suggesting the same might ditto apply to Mumbai. But maybe there is a sense of, sort of common experience on the RERA front across real estate players.
Yeah, and
but more importantly, the commercial cycle, as Ira pointed out.
Yeah, and no, but there's a point there, because Mumbai has been at the forefront when it comes to RERA registration, and the authority being right up there in making sure that projects are getting registered. The others are following, taking a leaf out of Mumbai's example.
Absolutely.
So maybe all of that. But the stocks are on a tear, and well, that's what we focus on.
All right. Real estate there. Now, let's shift attention from beyond India to what's going on in China. It's a meeting that will decide on the leadership of the world's largest country and 2nd largest economy in the next decade. The 19th Communist Party Congress kicks off tomorrow. And here's why it's important and why you should know about it and why we're talking about it here on, First Word. First, a little bit on what happens in that meeting. So roughly about 3,000 delegates will attend that 19th Congress. This is to elect members to the Central Committee, the Politburo, and the Politburo Standing Committee. The Politburo Standing Committee being at the top of the food chain in terms of politics in China, below which you've got the Politburo, and then you've got the Central Committee, which is much, much, much larger. Now, here's what's key and here's what's important. There are many elections happening in all these 3 branches of the party. But the most important one is that reports are suggesting that about 5 to 7 of the standing committee members are likely to retire and therefore get replaced. And who Xi Jinping replaces them with will tell us a little bit more about how he is looking to consolidate power as he begins his 2nd term in China as the head of the political party, not just the premier. So what can you expect over the course of the next several days. They don't define a period as to how long this Congress will go on for. I think last time it happened in 2012, it went on for about 8 days is what I remember. So this could be anywhere, a week, 8 days. It starts tomorrow, and I think here are 2 or 3 things that I've gathered from all the reading I've done, all the intelligence reports that are out there on China, on what you can expect. So firstly, will Xi Jinping indicate a successor of any sort? And this is going to be critical. Remember, he was appointed, I think, this is the 16th, I think, yeah. The 16th Congress is when, 17th Congress is when he was appointed as successor. He took over after the 18th Congress, which was in 2012 was when the 18th Congress happened. 2013 is when he took over. And so now is the time, as he begins his second term, for him to indicate a successor, if he intends to indicate a successor or not. If he doesn't indicate a successor, this may suggest that he might be setting the stage for a third term. Now, there is a lot that goes against him when it comes to the third term. There is a retirement age that plays out. There's the unspoken rule of only 2 terms, but this is concentration of power. And we've seen Xi Jinping only go from strength to strength in the Chinese political system. So nobody's really very sure on what he will try and achieve in this. And the reason we're talking about this is because, look, China plays such an important role in the global economy today. It plays such an important role in geopolitics today. So will he appoint a successor? That's one. The second thing we'll find out is whether he intends to maybe issue is not the right word, but to formulate a Xi Jinping doctrine. Now, there's a history to this. Mao Zedong had done that, and the doctrine was named on Mao. And then you had Deng Xiaoping do it, and their successors also did it, but only Mao and Deng had the doctrine named after themselves. So it is quite clear that he will spell out a doctrine, which is the Xi Jinping philosophy of life, or politics, if I may put it simply. But whether he calls it Xi Jinping something will sort of determine where he sees himself in the rank of historic leaders in China. So is he going to try and equate himself with Mao in any fashion is what everybody is looking out for. So that's important. What will happen on the economy agenda? There were a couple of things that they decided in the last one that all played out, right? So China said that they were going to work a little bit more harder on, sort of environmental protection. We've seen that play out in the Chinese economy over the last 5 years, especially in the way they've approached manufacturing, etc. They did say that they were going to look at, working towards becoming more of a market economy. Again, we've seen that play out over the last 5 years. So what's expected of the economic agenda? And we'll know right up front tomorrow, because all of this is laid out in the very first speech that Xi Jinping gives out. We're expecting to hear on the role of the market in the continuing growth of the Chinese economy. There is an expectation that the emphasis on GDP growth, which has been very, very high in China over the last couple of decades, might now start to wane as they look towards more sustainable growth. And this is a narrative that's been playing out in China over the last few years already. So as they look towards more sustainable growth, they might look to de-emphasize the GDP growth numbers from the 7+% that they've been doing to now the 7-% deleveraging. I think corporate debt's been a big conversation in China. So we'll see if anything happens on that front. The state-owned enterprises, the role they play in the economy, all of this continues to be on the agenda, and we're waiting to see, what policies Xi Jinping will set in his very first speech, which will then become the policy document and the key architecture for economic policy over the next 5 years. So this is how critical the party is. This is really the most important thing that China witnesses once every 5 years, which is why we're giving it so much time this morning and forcing you to listen through to all of this. And finally, here's one more thing that we expect will come out over the next few days. They may not make an official announcement, but there's a very good chance that the selection of the new central bank chief in China will happen over the next few days. The announcement might only just come in March, April, May next year, but the selection might in fact get done in the next few days itself. And that's going to be critical because the current serving chief is the longest serving chief I think any central bank has seen anywhere in the world. So that's going to be very interesting to watch. Here's an expert voice on what to expect from that 19th Congress. Cornell University Professor Ishwar Prasad, and a very well-known China expert, believes that it's more important to watch what comes out after the meeting rather than just the meeting. Here's the conversation that he had with Bloomberg.
What comes after the party congress is going to be far more important than what happens at the party congress itself. The question is whether Xi Jinping will reveal his true stripes. Now, the presumption is that he's going to consolidate his power both on the economic and political and military fronts. How he uses that power, whether he's going to push forward reforms more aggressively or roll back to a more state-dominated stance for the economy is what remains to be seen. And we will start to see glimpses of that in terms of the appointments that are made, both in the Standing Committee of the Politburo, the top policy-making body, but also in the coming weeks and months, we'll start seeing appointments at the major regulatory agencies. And there might be some reshuffling of those appointments, including an appointment at the People's Bank of China, the central bank. So those are going to be very important omens of what is going to come in terms of economic reforms or lack thereof.
All right, a lot of attention on China. Just brief mention of the other sort of North Korean story that has continued to play out. And this morning, again, comments coming in from North Korean leaders suggesting, dramatic comments as always suggesting there may be a breakout of a nuclear war at any moment. These are comments actually coming in from the deputy UN ambassador who warned on Monday that the situation in the Korean peninsula is touch and go. And if that they are threatened, they could choose to use their nuclear weaponry. So the comments coming in this morning again sort of reminding us that that problem is
more saber rattling from North Korea, right? Let's just hope it stays saber rattling.
Yes. Well, the markets would certainly, or the world by and large would certainly hope that it stays that way and doesn't really escalate into anything further. But these are grave comments. Let's wait and watch what happens during the course of the day today. But just as we come to the end of First Word, I think one set of earnings that we need to talk about is Bajaj Auto. One, by virtue of the fact that the auto sector is in the thick of things. It's done very well. Bajaj Auto as a stock has done very well. And it's that one index name that comes out during market hours today. Yatin Mota is standing by with a list of what might work and what might not for the automaker in Q2. Yatin, good morning.
Good morning, Neeraj. This time, of course, after 5 consecutive quarters of volume decline, we have Bajaj Auto, which has finally managed to report a positive sales volume growth, and clearly because of that we are looking at some strong revenue growth coming in. In fact, we are expecting the total revenues for Bajaj Auto to rise nearly 9% for the second quarter this time. Of course, the profitability, the margins and the profits will be slightly under pressure given the fact that we have the rising commodity costs which will be impacting the overall margin picture for Bajaj Auto. And apart from that, remember Bajaj Auto sits on the cash pile of over 10,000 crores, and the reducing interest rates will clearly impact their other income, because of which the profits are also expected to decline by nearly 3% as per the Bloomberg poll. So at this point in time, the overall quarter will look flattish when it comes to profitability for Bajaj Auto. Of course, apart from the overall earnings, the key important factors to watch out for will be the management commentary on the domestic festive demand as well as the export markets, especially Nigeria and Sri Lanka, because the management, when I last spoke with them, said that these export markets are expected to do extremely well in the second half of this financial year. So the management commentary there will be equally important.
Okay. Watch out for that. Q1 volume growth has improved, as Yatin said. First time in the last 6 quarters that Bajaj Auto has delivered positive volume growth. So this should be interesting to watch. Of course, Kevin Disa, the man in charge of Bajaj Auto's finances, would be joining us at 1 p.m. to talk about the company's second quarter earnings. So that's something that you wouldn't want to miss.
All right, that's not all we have lined up for you this morning and later on in the day. Later on this very show, we speak about markets with Nilesh Shah of Envision Capital, festive demand with Nilesh Gupta of Vijay Sales, and we decode earnings with Anand Deshpande of Persistent Systems. So we've got a lot lined up over the course of the next couple of hours. Make sure you stay tuned to BQ Live. Let's move it back to markets, Neeraj.
Yes, full tilt towards the markets, towards the day's trade. Let's start off with a quick look at the derivative space. Navneet Saluja is waiting by with the FNO setup for the morning. Navneet, good morning.
Hi Neeraj, good morning. Well, the HX Nifty this morning is suggesting some sort of profit booking which should come into the markets. It's suggesting a downtick of 20 points. But let's look at yesterday's data points. Nifty futures surge and the premium was almost 25 points, which was almost the same, indicating that there were fresh long positions which were being taken at the higher levels as well. But no major addition was seen in terms of open interest. And similarly is the case with the Bank Nifty futures. In fact, there was some sort of unwinding seen for Bank Nifty futures, which closed with premium of 40 points, and the open interest was down nearly 6 points. Well, in a trending market, which is actually trending higher, you had the India VIX, which was up for the second straight session. That will just come up on your screen. India VIX yesterday closed at levels of 11.3. But some very interesting data points are emerging if you look at the futures and the options market. This is the put-call ratio. This is where we started our series actually at 1.24. We started the series on September 28. Look at this. It's been only going up, and yesterday the Nifty PCR closed at levels of almost 1.67, clearly telling you there is immense put writing in the system. Let's just pull up the active strikes and tell you which are those put strikes which have been adding open interest in the last few trading sessions. In fact, in the yesterday's session, you saw 10,200 as well as the 10,300 strike adding a lot of open interest. Major was seen for the 10,200, which added almost 22 lakh shares. On the call side, once again, there was some unwinding seen for the 10,200. Clearly, if you look at the maximum open interest concentration, it is still between the 10,000 as well as the 10,200 strike. Remains to be seen. We have to close above the 10,200 for 4 to 5 trading session for markets to trend higher to levels of 10,500. Before I wrap, just a very important data points from the FI setup. Actually, they've been adding a lot of long positions in the index futures. We know that the FIs have been selling in the cash, but clearly they are making some sort of money when it comes to the F&O market. When we started the series, FIs were net long on index futures, almost 56%. Look at that ratio. That's come to almost 63%. That's telling you they are cutting down on their shorts and they're increasing their longs on the index futures. And similar is the trend that we've been seeing in the option space as well. In yesterday's session, they added more of longs and they wrote more of puts. Clearly, that's once again a very positive sign. In fact, if you look at the short positions on the option side, they started the series with writing more of calls. Now that ratio has come down. In fact, when we started the series, they were net short on the call. That ratio was 59, but now the put ratio has gone higher to almost 54%, telling you that they have been making money in the futures and options market.
Watch out for all of those. Thanks a lot for that, Navneet. Abhijit Pathak joins in with his sense of the derivative space this morning. Abhijit, what is the F&O market indicating for trade today? We'll start off slightly lower. What does one do post that?
Yeah, even if we start off slightly lower, there will be support near 10,180 on Nifty, but then again at the same time there will be resistance near 10,240, 10,250. So it's better to go short in terms of buying a put near 10,250 because I don't think it will go up, cross that in a hurry immediately. It might play in this range of 70-80 points and eventually it might go below 10,180 is what I feel right now.
So what's the strategy that you would initiate on any of the key indices, Abhijit? Either the Nifty or the Nifty Bank?
Yeah, in Nifty, closer to 10,250, it is better to safely buy a 10,200 put, which might be near 35 or 40. So it is a safe bet, low risk. And if Nifty falls down, this can go up.
Okay, so buy the 10,200 put option, Abhijit. That's the strategy that you are recommending for the Nifty, right? At the current market price.
No, around 40. Near when Nifty is near 10,240, 10,250.
Okay, that's when you go out and buy the 10,200 put option. That's one strategy. Let's look at the stock-specific strategy from Abhijit Pathak. That's a Sun TV. What's the strategy here, Abhijit? What is the thought process?
Yeah, Sun TV is looking bullish to me. On any dip to 810 futures, it is a buy, and if 800, 805 is held, which will be the stop loss, it can go towards 825, 830. Sun TV.
Okay, so that's the call from Abhijit Pathak. A stop loss of 805, a target of 825 to 830. The solitary recommendation from Abhijit this morning, and that's on Sun TV. Abhijit, thanks a lot for joining us today and giving us those strategies. Okay, as we head into somewhat 2074, listen into some of the top market voices on where they see the markets headed and what are some of the stocks that they are betting on. Navneet and Pradeep got into a conversation with Sudeep Bandyopadhyay, Dilip Bhatt and Himang Jani. Listen in.
Markets have been very kind and markets have done pretty well. And most important, I think markets have been surging ahead in terms of the prices as compared to the valuation. So in that sense, it has been a very challenging times because valuations are simply, prices are simply far ahead of the valuations. And we are just seeing that even the economy is yet to catch up in a way which will give a lot of confidence to the investors. And of course, the corporate earnings are still lagging way behind. So you have these three equations. You have corporate earning prices very high, followed by economy, which is way behind, and then you have corporate earning, which is simply lagging much behind. So as we move into this year, I think we think that markets will continue to be very challenging in the sense that at this overvalued levels, to try and pick and make money is going to be a kind of a challenge. So I think till the time both these factors give some kind of tailwinds or some kind of comfort, markets possibly will in the short term will remain range bound, but there is no doubt that in the longer term we all feel that the trajectory is one of northwards and markets should continue to do well, especially given the fact that there is a good amount of domestic liquidity which is swashing the markets.
When you pick up a stock for next Samvat, will you rather try to avoid losses, avoid overvalued sectors, or there are there are options in plenty and you can choose, pick and choose very easily? So is it more of a selection or elimination? That's what I would like to know.
As I said that I would definitely like to go with the sectors and companies which have been doing well, because last 2 years in terms of economy, in terms of growth, have been challenging. We had a lot of disruptions. So the companies which have a better business model, better management quality, and where you see the growth visibility are the ones that I would go with.
And your top pick will be?
And my top pick would be IndianOpen Bank, because this is one of the best performing banks in the last 2 or 3 years. It's been doing better than the bank Nifty and it's growing at about 25-27%. And we believe that this merger news which have come out with Bharat Finance, it's a large merger, and we think that there are certain distinct advantages that IndianOpen Bank would have because of that cost of funds being lower, which would be a big advantage. Bharat Finance is a much better capital adequacy at 33%, so that will be one important thing. And the kind of priority sector portfolio that they have would also be a big advantage. There are going to be challenges because it's a big merger that they are working with in terms of integration, etc. But we think that now that the bank has been growing at 25-27%, if they do not do something to sustain this growth, it would be a big challenge.
Do you think without this merger consolidation, it would be difficult for a bank like IndianOpen, who's been growing at that CAGR of 25% in the last 3 or 5 years?
Absolutely. I think for most of the private sector banks, it's absolutely important that they build enough products around their core business to sustain this kind of a growth for the next 2 to 3 years.
What sort of returns till next Diwali do you expect on IndianOpen?
We are looking at about 22% kind of a growth for IndianOpen Bank from current levels.
Sudeep, you're betting on an apparel company at a time post GST. I think a lot of exporters have been worried with regard to this new unified tax regime. How do you think this apparel company will benefit? I think you've chosen SP Apparel.
That's right. I think you look at GST in a slightly longer time frame. If you're looking at GST within 2-3 months or quarters, then of course there is a lot of destabilization and uncertainty. But I think in a 1 year plus time horizon, and GST is going to be there forever.
Sure.
So I think these organized players will benefit. If you look at their domestic business, definitely they're going to benefit. If you look at their global business, which is growing and will continue to grow, I think they're going to benefit. There's absolutely no doubt in my mind. Look, they're in a very niche segment. It's not a run-of-the-mill apparel company. They are into children and infant wear, knitted garments. And there is this business is to a great extent, we have seen over the years, it's kind of recession-proof and proof of many things. A lot of destabilization happens, but you don't stop buying clothes for babies. You have to buy those, and population is growing, blah blah. So I think they're in a very very niche, little nice business. The business is growing. They've completed their backward integration. It's a wholly integrated facility in a single area, and that gives them huge cost advantage. So I think the margins are going to expand for the company. Remember,
and what are the current margins?
Current margins is around 24-25%, and it is going to expand from here on as well.
What kind of target you have?
We are looking at a target of 500 plus as far as this company is concerned.
By next Diwali.
That's right.
Okay, and you can watch this entire show during the trading day today. We'll play out snippets of this conversation and some stock ideas all through the day. Having said that, let's shift focus to what could be happening in the day today and start off with a quick check on the commodity space. Pradeep Pandya Johnson for that. Pradeep, good morning. What's moving, what's not?
Good morning. So most importantly, the base metal stocks moved yesterday to hit new highs, and what's happening actually, copper has rallied and other base metals have also followed. We see a 3-year high on copper that went past $7,000 per ton. This is on the back of strong Chinese data that came out, and there are more releases lined up. If you look at China, on Thursday, China will release GDP, industrial production, and also retail sales. So these are some of the most important data points really to watch out for that will keep guiding commodity markets and, of course, commodity stocks. So we'll keep focusing on that. And let's see how the Asian markets are doing at this point of time. There is a bit of red, Neeraj, so to say.
Yeah, a bit of red, but maybe on anticipated lines, Pradeep. We've had such a heady run that it's okay. Yesterday, the markets came off from the high point of the day, and today, looking like we'll start off on a flattish note. The SGX Nifty indicating about 20-odd point downtick that we may face at the start of the trading session today. So let's watch out for that. Okay, before we get in our experts, though, I think Mr. G. Chokalingam and Avinash Gorakshekar should be joining us any moments. Okay, we do have Mr. G. Chokalingam, founder and managing director at Economics Research and Advisory, joins us on the show. Good having you, Mr. Chokalingam. Thanks so much for joining in. What are you watching out for today? 3 or 4 index stocks coming out with results. Which is the one stock that you'd watch out for the most? Axis, Bajaj Auto, or Wipro?
Axis. Wipro, most of us know the whole large IT space is struggling to grow even in rupee term in double digit. So I would shift my focus on Axis Bank. Perhaps this time the net NPA should peak out. The burden on the provision should come down, and therefore there should be healthy profit growth. So if that happens, the stock should probably start rewarding the investors.
Anything in terms of results that came out overnight, Mr. Chokalingam, that stood out for you? I think mid-cap IT is packing a serious punch this quarter, until now at least.
Not overnight. In the last few days, we have seen a good results from Cyient, and market has rewarded. I believe that the mid-sized IT companies would continue to do well, better than the large IT cap stocks, because as I've been saying for the last couple of years, the consolidation would continue because large IT companies are not able to grow even in rupee term in double digit, their top line. So therefore, further consolidation should happen, and that should augur well for mid-sized IT companies.
Okay. Well, earnings season is beginning to gather steam, and there were some result announcements after market closing on Monday. Darshan Mehta joins us with earnings snapshot on the good, bad and the ugly. Darshan, morning.
Good morning, Pradeep. And if you're looking at the screen, more green than yellow and absolutely no red, indicating that the results have been pretty decent this time around. So Oberoi Realty, DCB, Saskin, Hudson and Delta Corp came out with strong numbers. Persistent and Bajaj Finserv came out with an inline set of numbers. We'll discuss some of them. Let's start with DCB Bank. Pretty decent set of numbers that came out. Profits were up almost 21%. The NII was up almost 30%. Asset quality was rather stable even on a quarter-on-quarter basis. Slight deterioration on the GNPA, but on the net NPA it came down. Steady NIMs at 4.2%. So strong set of numbers from DCB Bank. This one will be the important one. Saskin came out with a very strong set of numbers. These are on a quarter-on-quarter basis. So on a quarter-on-quarter basis, their profits grew almost 9%. If you're looking at their revenues, that grew almost 6%. So strong set of numbers that came in. Is the highest revenue since December 2015. Margins at almost 15% versus 11%, and a very, very strong set of margins. So Saskin will definitely I'll watch out for. Hudson Agro also strong set of numbers. Profits up almost 17%. Revenues up almost 7%. Margins coming in at close to 10% for the company compared to 9% last time. Delta Corp, very strong set of numbers. Profits up 33%. revenues up almost 8%. If you're looking at the margins, also moved to levels of close to 45%. Margin was slightly impacted because of GST. Nevertheless, there is a margin increase, and this online model did significant amount of contribution as far as the top line is concerned. And finally, as far as inline set of numbers is concerned, Bajaj Finserv net profit was up almost 13%, but this came in below what the Bloomberg consensus poll was. Revenue growth of almost 27%. The insurance business did well. The lending business was rather weak. On the insurance front, both the general insurance had a very strong show this time around, and the life insurance business, because of a weak base last time around, the growth was there. But in sense, inline set of numbers, Nomura also came out with a note indicating they were also indicating an inline set of numbers for Bajaj Finserv.
Wow, thanks a lot for that, Darshan. Well, I must say, I've looked at Darshan's heat map the last 2 days. There is more green, maybe a little bit of yellow as well, and hardly any red. Even in yesterday's session, there was more green than red. Seems like this reporting season is picking off on a good note. Avinash Gorakshekhar joins in. Avinash, mid-cap IT, Cyient, Sasken, Persistent. What's happening here?
No, I think, Neeraj, I think it's definitely a pleasant surprise that within the mid-cap basket, we are seeing very good numbers. In fact, Cyient has been quite positive. In fact, there's been a lot of fund buying also post the results. But our sense is that clearly, stocks like Cyient, or for that reason, even Persistent, are definitely good kind of picks to actually bet on if one were to look at a slightly longer term angle. And I would believe that, the larger companies obviously would have a challenging time, considering that the base effect would obviously also play out. But the smaller companies, definitely, if their cost metrics are definitely strong, I would believe that, Persistent, or for that reason, Cyient definitely qualifies a good investment call if the time horizon is at least 12 to 18 months.
Okay. Mr. Chokalingam, DCB Bank number also impressive. If you look at it, first we had Federal Bank, now DCB. Banks, smaller banks are probably doing much better than NBFCs, but there is, in terms of valuation, still a lot to catch up. What do you say?
Yeah, I agree with you. We are bullish on some of these mid-sized private banks, especially the old private sector bank. DCB numbers are good, no doubt. And also after seeing this Bharat Finance acquisition, which happened at over 5 times book value and over 50 times its annual profit in FY 2017, we have become more bullish on the mid-sized private banks because these banks have achieved a critical mass of 1 lakh crore of business, and most of these banks are trading at anywhere from 1.1 to 2.5 times adjusted book value, much cheaper than the valuation given to Bharat Finance. Whereas the banks have got access to cheap public deposits, which many NBFCs don't have. So this event has given us more confidence. So that's why we have been suggesting aggressive buying of old private sector banks like South Indian Bank.
Okay. So that's some key results to watch out for. In terms of stocks coming out with numbers today, Avinash, Mr. Chokalingam said Axis Bank is something that he'll watch out for the most. What about you? Bajaj Auto, Axis, or?
No, I think, Neeraj, I would definitely look at numbers from Bajaj Auto, because Bajaj Auto actually showed a very strong volume growth in the month of September. And I would suggest that, going forward, looking at the kind of rural pickup, clearly two-wheelers is one space which has seen a lot of activity, and hopefully if the management gives a positive commentary on the kind of volume numbers, I would believe Bajaj Auto definitely could be a kind of a surprise winner. Hopefully the numbers should not be that bad. But yes, I would be looking at EBITDA margins and what kind of volume growth trajectory the management would be talking in the coming quarters, and that would definitely be very important for the stock movement going forward.
And Pradeep, yesterday the auto companies were on a tear. Nifty Auto Index up 1.25%. But M&M and Tata Motors, TVR, if I'm not wrong, and some of the others had a fabulous move.
So I think this month's data should also be good, backed by the buying around Diwali. But there will be a base effect really, to take care of, because last time around, the base was much higher for October.
Right.
Yeah, okay. Because the October was the main festive season that included both Navratri and Dussehra. So it would be interesting to see, how numbers really look in the first week of November when we get them.
Yeah, but would people probably preempt, and I know you've got to go to the research team as well, but would people probably preempt the fact that December last year had such a low base that this December could actually have a decent base as well?
So that number is still, 3 months away. We'll get that number in January.
Yeah, so let's wait and watch.
Yes. Well, let's move on to our research team and see what exactly they are looking at. Interesting numbers, so many mid-cap results actually, and the research reports that followed these interesting numbers. First up is Oberoi Realty. Jayesh, how is it? It's a beat, right?
Morning, Pradeep. Absolutely. So it seems like Diwali has come early for Oberoi Realty. Now, we were expecting that a muted quarter to come about for Oberoi, wherein expectation was that top line and bottom line will grow at about 2 to 3%. In fact, what has come out is that they have grown at about 20 and 30% respectively. So revenue that they have reported is up 20%, EBITDA is up 30%, and there has been significant margin expansion from about 49.9% to 54% for this quarter. Net profit too has seen a surge of about 25%. So positive on all aspects that we were watching out for, and a beat on all counts. As far as the segmental highlights were concerned, if you look at their revenue from real estate, that grew at about 23%. Some bit, the only disappointment that I have picked up is from the hospitality revenue, which has actually degrown 1%. But if you look at the operational highlights of these segments over there, hospitality has in fact seen a surge of about 23%, and real estate is up as much as 30%. So overall, Pradeep, very good results coming in for Oberoi Realty. But also remember that the stock has run up significantly. Last 3 days it is up 18%. So it will be very interesting to watch out how the stock reacts to this.
Well, IFB is the stock that Nikki is tracking. What's the update?
Interesting counter there. Jaiprakash Investments has bought in the company, bought 1.7% stake in the company, valuing the deal to around 56 odd crore. DSP BlackRock is on the selling side, has exited the counter, has sold in 1.2% stake at a price of nearly 38 odd crore. Talking a little bit about Jaiprakash Investment Holding now, this company through Westbridge Holding, the PE equity firm, through Jaiprakash Investment Holdings holds a number of companies, has bought a stake in a number of companies, including V-Mart Retail, and then you have Relaxo, Seat, and then Green Lamb Industry, Ashiana Housing. Talking a little bit about the company, well, household appliance maker with a market capitalization of around 3,274 odd crore. It gets 83% of its revenue from household appliance and nearly 17% coming in from fine blanking. Shareholding pattern, promoters holding good enough, 75% stake in the company, public holding is 25%, and also do remember Dolly Khanna owns nearly 1.05% stake in the company. In terms of financials, it's a nearly debt-free and a cash-rich company, on account of which it's really demanding a higher side valuation or a healthy valuation as compared to its peers. If you look at the IFB industry PE, it's demanding a PE of nearly 64 times. The TTM PE, it's almost 64 times as compared to when you make a comparison, something like Bajaj Electricals and Crompton, which are trading in the range of 39 to 47 odd percent. So there is an expensive valuation that we're looking out for this counter. In terms of its YTD performance, both on in terms of its stock performance, both on YTD basis as well as yearly basis, the company has fetched a return of nearly 70 odd percent, and the company, this stock has been gaining for past 7 consecutive sessions and has nearly gained around 12% for that matter.
Okay. And for more stocks and news, Shraddha, what is there in your list?
Well, to start off with Mahindra Finance, which will be gaining pre-tax a gain of about 65 crores by selling 5% stake in its insurance subsidiary. So it's a transaction where two things are happening. First, the existing minority shareholder, which is Leapfrog Financial Inclusion, they have 15% stake in Mahindra Insurance Brokers right now. They will buy additional 5% stake from Mahindra Finance, so their total shareholding will become 20%. Then Leapfrog will sell this 20% to another minority investor, which is XL Group, which is a global reinsurance company. So basically you have the minority shareholding which is changing hands, and for the 5% stake that Mahindra Finance will sell in Mahindra Insurance Brokers, they will get 65 crores. So the net impact is that additional money that Mahindra Insurance will earn, and Morgan Stanley estimates that this will help their tier capital ratios to go up by anywhere between 10 to 15 basis points. They have valued the company at about 1,200 crores versus 1,300 crores, which this deal implies, and they've maintained overweight on Mahindra Finance, which target price of 475. So we could see some reaction there. You have DB Realty, which has settled a 30 crore debt claim of LIC Housing Finance, so we could see some reaction there as well. PNB which is looking to raise $250 to $300 million via QIP. This is Mint news. The Dena Bank QIP last week did sail through, but at a discount, so it will be interesting to see what happens with PNB. And on the back of Bultils, we're tracking Aries Agro, where renowned investor Vijay Kedia has bought 2% stake in the company at the price of 199.9. Now that translates into an investment of just 2 crores, but just highlights that this stock is in his investment radar. And lastly, Radhiko Khaitan, where Societe Generale has bought 1.5% stake.
Well, thanks, Shraddha, Nikki, and Jayesh. IFP Industries, that is one interesting stock. Mr. Chokalingam, if you have been tracking it, like our research analyst really indicates, that this stock is expensive but continues to attract big investors.
Yeah, that's why I feel retail investors should sell the stock and realize a profit. There is no valuation comfort at all. If you look at the June results, the PBT is down substantially from 16.7 crore last year to 10.7 crore in this June quarter. I mean, paying 60-70 PE for a company like this is not justifiable at all. So I think this is the best time to sell this kind of stocks.
Okay. Stay on, gentlemen. So much more to speak about, but it's that time of the show wherein we shift our focus to our derivatives and technical experts for the day. Two friends, Adrian Mendonca as well as Gaurav Bisa, join in to talk about the charts as well as the derivative space. Gentlemen, good morning, both of you. Thanks so much for joining in. Gaurav, let's start off with you. What should one do on the index? Came off a bit yesterday, might start off in the red today. What's the strategy on the index?
Good morning. Let me first wish you, your team, your entire set of viewers very happy Dhanteras and happy Diwali and happy New Year in advance.
Thank you, Gaurav.
And as far as the index is concerned, if you look at 10,200 put options in significant writing, I mean, very rarely do you see at the money options seeing such rigorous writing. And if there's a breakout on our charts as well, and there has been consistent long pushing that we've seen getting built in Nifty index. So yes, I expect if 10,200 is sustained, another 150 points up move cannot be ruled out in this series. So any dip towards 10,200, 10,210 spot levels can be used to build long positions for 10,320, 10,350 kind of levels with a stop loss at 10,160 levels. Bank Nifty is yet to make a fresh high, but I would buy it on dips. But Nifty is giving a clearer trade at this point in time.
Okay, morning, Gaurav. You are in festive mood and festive attire, and also good to see that you have all the buy recommendations today. Other than Nifty, you are also bullish on two mid-cap stocks. If you could take us through those recommendations.
First is the buy on Torrent Power. If you look at the kind of additions that we have seen, 230 call option commanded the highest concentration for last 4 to 5 months. We have seen the stock trading in a range of 200 230. There has been some spurs that we saw about 230 but did not sustain those levels. We are now seeing a volume-wise breakout on daily charts as well. Good amount of long position is seen getting built, and if it sustains 230, I would not be surprised with 250 to 55 kind of targets coming with relative ease. On that premise, one can buy Torrent Power for a target of 250 with a stop loss at 230. Second is buy on Ramco Cements. It has been trading in a range. The range has been very firm, 665 to 735, 740. That has been the range. Since it is at the lower end of the range, and there's a possibility that Nifty might open with 10-15 point downside, as what the agent is pointing. You can get it around 684, 685. That would be a decent level, not very lower than the previous close price. One can have a stop of 670 and play for types of 725. I think this can be one of the better mid-cap names for the next 2 or 3 months also.
Okay. Well, Hadrian, your picks for this morning, you are focusing more on heavyweights.
Yeah, definitely. I'd like to stick with the heavyweights because I think the mood in which Nifty is and the extreme buoyancy that we are seeing on the charts and the way the heavyweights are participating. I think Sun Pharma is one stock that I would focus on. We've seen a fresh flag pattern breakout. In fact, there is a typical characteristic in which Sun Pharma moves. It always creates a consolidation pattern and then breaks out of it for a fresh up move. So it is a repeat of something that Sun Pharma is doing from the past 2 to 3 weeks now. So I think this continuation breakout will hold on to, and it is also holding on above its 21-day moving average. So, all these signs are actually, telling us that Sun Pharma is well on its way towards its potential target of 570 in the short term, to keep a stop loss of close to 536 on, long Sun Pharma.
Okay. Well, on to our special segment on the show, Bloomberg Edge. Jayesh Khilnani joins us with a technical indicator on NBCC. What is it, Jayesh, bullish or bearish?
Bearish indicator coming in for NBCC. So the indicator that we are looking at today is Bollinger Bands, and as per the theory behind the Bollinger Band, there is a possible sell signal that has been generated on the stock as of yesterday's close price. So let's have a look at how the actual Bollinger Band works. So it is a pattern which shows you the expected price range given the volatility that is there in the market, and it plots three lines. So essentially it's the moving average, upper band and a lower band that get plotted, which is a 2 standard deviation above and below the moving average that we have. Now let's have a look at how the actual bands, when you interpret the bands. So when you look at the bands, when the bands are expanding, it means that they are in a trending market, and when the bands contract, which means that we are in a sideways market or in a consolidation phase. Now there is a particular pattern that we are watching out for, which is called as the outside inside formation. What it essentially means that the first candle has to close outside of the band, and the immediate next candle has to come within the range. Now let's have a look at the chart of NBCC and how the Bollinger Bands have actually planned out according to so now this is where we are focusing on. Now you can see that this red candle, which was outside or above the blue line, which means that the outside pattern has happened over there, and the immediate next candle, which is also a down candle, has come back within the range. Now this is where the sell signal has come in, which indicates that there might be a possible downside up to the moving average, which is closer to 220 levels.
And how effectively does Bollinger really work with this stock?
So Pradeep, actually very well. I just looked at the backtesting results that the Bloomberg terminal throws up, and the potential return that one would have generated on Bollinger Bands would be close to 40%.
Well, thanks Jayesh for that update. So NBCC looks bearish technically at this point of time. Avinash, do you track this stock? Any calls?
No, in fact, Pradeep, I think on the fundamental side, I think the kind of balance sheet and the kind of cash the company has, and more importantly the visibility which the order book provides, I would believe that any technical decline is a kind of an opportunity to actually buy the stock, because typically this has been a very strong favorite with the fund community, with the HNIs. So I would believe that any correction of any sort what Jayesh is mentioning is definitely a good opportunity to actually accumulate it. This is a portfolio stock, and actually I believe the next 12 to 18 months could be definitely be very strong in terms of earnings traction and in terms of the overall upside for the stock.
Hadrian, what about NBCC on the charts? I mean, the Bollinger Band suggests that there could be a roadblock ahead. Do your charts suggest taking some money off the table if you were long in NBCC?
Yeah, surely, because the way the stock has moved, and a day before we have seen a doji pattern being created on the chart after a strong up move, and we've seen close below the doji pattern. So I think this is more than enough to actually indicate that we could see some kind of profit booking, or even some kind of fresh short selling happening in the stock. So yeah, definitely a long position should take your profits off, and if you're wanting to start buying NBCC, I think 220, 225 is the perfect zone where you can once again re-enter.
Watch out. The order book is filling, but maybe the stock price is taking into account all the positive benefits as well. I think the one that came out with good numbers, and I think the better quarter is yet to come, is Delta Corp. Typically, you would assume that the OND, which is the October, November, December quarter, which is the current quarter wherein people would holiday in Goa more, would be a good quarter. But the quarter gone by, the numbers haven't been too bad from Delta Corp's side. Mr. Chokalingam, what about this one? It's now multiple casino business. The big trigger in Daman is yet to come, and yet the quarterly numbers are not looking bad at all.
Yeah, maybe long-term investors can buy because the stock from the bottom has already multiplied. I do agree with you. The casino business is a very promising business, and it's a monopoly in the country. So definitely there is an opportunity in the long term. But probably one can look at it, if there is small correction, because from the bottom it has already multiplied several times.
Sorry, I just wanted to ask in one more question to Avinash on a Motilal Oswal note that has come in, and that is on Prime Focus. They are initiating coverage. Their target prices are substantially higher than the current market price, and they believe that their forte in global media services will drive profitable growth for this company. Do you track Prime Focus fundamentally, Avinash?
In fact, Neeraj, I would believe that this is a niche player in the media space and not like a typical broadcasting media play, but definitely the kind of services they have been providing not only to Indian but global kind of clients. Definitely, I mean, if one were to look at a longer term kind of time horizon, this stock has all the legs to actually deliver very strong, returns in terms of the earnings growth trajectory. The stock had remained a little lackluster because the company had a large amount of debt on the balance sheet, but I think now the balance sheet has become lean, and most importantly with the kind of order book they have, the next 12 to 18 months the revenue visibility appears to be pretty strong. So I think somebody who wants to take a long term call on a niche media play could definitely look at, but provided the time horizon is slightly longer term.
Okay, Jaiprakash Power, that's the stock, Mr. Chokalingam. If you are tracking it, what's your view on it with 5 investors bidding for the company?
I think not much scope for the shareholder, but these developments are good for the lenders, because I believe attractive assets are sold, at impressive prices for the buyer, and therefore nothing much would be left for the shareholder. It's a good development for the stock market as well as for the economy, because stress on the banking system would come down due to this restructuring. That's my firm view.
Okay. Watch out. The stock was active in trade yesterday. And could be an interesting one in the session today as well. A bunch of mid caps which will be in focus today. I think I was looking at the fund action. So one is Aries Agro, in which Vijay Kedia has bought an additional stake. It's a small purchase, but the stock was up about 90% in trade yesterday. So do watch out for Aries Agro. There was IFB Industries, which Pradeep spoke about, wherein Mr. Chokalingam believes that it might be a good idea to lighten up the positions. But Jwalamukhi Investment has gotten into it. Though I must mention that DSP BlackRock has sold about 4.6% stake out here. So it's a good name that has gotten out of IFB as well. But interesting names out there in which some bulk deals are happening. Aries Agro, Avinash, any quick thoughts here? 30 seconds.
I think, from a longer term perspective, they operate on the dairy business side, and I think we have seen a lot of action on the dairy business side, Neeraj. So I would believe that, yes, this is definitely not a well covered stock, and, liquidity is very limited. But if one were to look at the kind of earnings growth trajectory over the next, say, 12, 18 months, I would believe that, there could be a big upside provided, the company delivers on earnings.
Okay, big upside if the company delivers on earnings in Aries Agro. Do watch out though. In today's session, there could be some upsides because of the name associated, that is Vijay Kedia. How are the markets likely to start off? The SGX Nifty is indicating about 21 odd points on the downside. So we'll start off maybe on a slightly sluggish note and then make our way from there. The start will be flat. Let's see what happens during the course of the day. On expected lines, I wouldn't be surprised if these are the numbers on the Nifty. Don't look at the Sensex. I don't think we'll have a 125 or 130 point uptick. We'll probably start off about 9-10 points lower, or maybe more than that on the Nifty and correspondingly on the Sensex as well. Bring up some result reactions, or maybe some companies which come out with results. Okay, either or. So let's bring up Axis, Bajaj Auto, as well as Wipro. These are the 3 numbers that will come out the results. And ahead of the numbers, the stock's likely to remain slightly flattish. Whether they are reactions to strong results like Oberoi Realty, Delta Corp, and mid-cap IT, Sasken and Persistent Systems. That's the bit that we'll be watching out for. Ho-hum, these are initial times. Maybe these numbers will change, but Sasken and Persistent Systems, well, 6.5 for Persistent, very strong set of numbers delivered by the stock, and could see some reaction there. Let's see if Sasken, the reaction comes in, about 2.5%. So it's all about the mid caps, Pradeep, this morning, not so much about the large cap in terms of reactions at least.
Yeah, so good day for mid cap IT. Some of the mid cap stocks to watch out for would be JP Power. You'll have DB Realty, which has repaid LIC Housing Finance's debt. We also have an eye on V2 Retail, which is looking to allot shares to some new investors, and M&M Finance that we talked about. That's yet another stock. Well, among mid caps, also HCL Infosystem, which is going to consider rights issue on October 20th. How is that stock really reacting? no action on this. I think this was probably in the price already. Punjab National Bank has come out with the QIP, so that is one stock really to watch out for. And also GTL Infra, which is looking to refinance its debt, some of the less tracked stocks actually. So net mid caps are doing well, more based on results and news than anything else. Reliance Industries among the heavyweights should also be watched, because yesterday it didn't quite react to the result, and today it's down around 8%. That's interesting. We'll wait for that one to settle down and also discuss, Gaurav. But do you have a view on RIL?
Well, yes, we have seen already the stock had moved ahead of the earnings. If you look at 2 or 3 days before, we had seen good amount of long positions, and there was a breakout on daily as hourly charts as well. So it had moved up already, and there expectation that it will not move more than 905 kind of levels. And now we are seeing some sort of unwinding happening. Having said that, the immediate supports are seen somewhere around 855, 850. So any dip towards 850 would be a welcome move. And I think from there we can again see the next round of upside coming up. But I would not preempt here. Let it come towards 850, and then one can have a 10 rupees stop loss and be long in the name.
Okay, wait for it to correct to 815. That's the call. Well, it's 2 days to Diwali and new Samvat, so brokerages are coming out with interesting picks for the new Samvat, and Saloni Dhanuka has put together some of the top picks from Axis and ICICI Direct. Saloni, which are the stocks these brokerages are recommending?
So, well, Pradeep, top 5 investment picks by ICICI Direct are Dilip Bilcon, Moltech Packaging, Minda Corporation, Steel Strip Wheels, as well as Luxman Industries. Now, for Dilip Bilcon, they believe that the sale of project of finance assets have let the company focus on its strategy of being a leading EPC player in the infrastructure space, while for Moltech Packaging, they believe that the rising contribution from the food and FMCG segment will lead to higher margins going ahead. While Axis remains bullish on Minda Corporation, as they believe that the company's focus on exports and greenfield expansion will boost volumes and profits for the company in this financial year. For Steel Strip Wheels, alloy wheels as well as commercial vehicle segments are expected to add significant value for the company. And lastly, Axis believes that Luxman Industries will be the key beneficiary of rising LED share in the automotive lighting segment. Moving to ICICI Direct's top 5 investment ideas for this Samvat are Forging, Sagar Cements, NRB Bearing, India Styrolution and Prabhat Dairy. Now for Forgings, they believe that demand for domestic automotive market as well as US commercial vehicle segment will drive the revenue growth by 15% in next 2 to 3 years. For Sagar Cements, they believe that the cement demand in southern markets will pick up given government's increased spending on affordable housing and low infra projects, while they recommend NRB Bearings on the back of stabilized margins for the company for the next 2 to 3 years. And for India Styrolution, they believe that company's margin will stabilize in next 1 year given its focus on specialty products. And lastly, for Prabhat Dairy, they believe that the milk procurement prices have come down by 11% in the past 2 months, and having said that, this will provide short-term relief for the company.
Okay, thanks a lot for that, Saloni. So that's a summation of some Diwali ideas if you needed some. All of us do need that, so it's an interesting assortment, and we'll do this every single day. We did it yesterday, we've done it today, and we'll do it tomorrow as well. By the way, thanks to some of the viewers who are tuning in and asking questions on our on the social media pages as well. Just one question before I move on to the next piece of research that we have done today. It's a question that has come in from Karthik Sabne asking about outlook towards Shankara Building Products from the current market price. Mr. Chokalingam, you track Shankara Building Products. What's your view here?
Yeah, it has run up, almost tripled. The kind of P multiple it has on 1 year forward earning, which is more than 30, I am not comfortable with the stock.
Okay, not comfortable. Avinash, very quickly, have you looked at Shankara?
No, I think clearly within the building product space, Neeraj, I would believe that despite the fact that the stock has actually moved up from its initial IPO price, I would believe that somebody who has the position open here can expect another 15% upside over the next 12 months. Yes, I think any correction on the downside can be used as an opportunity to accumulate.
Okay. 9:05, that time of the show wherein we get you the last few days what fund houses are doing. ICICI Prudential, the largest fund house in terms of equities under management, sold some stake in 2 Tata companies last month. It's also bought some stake in sister concern ICICI Lombard. Jayesh has drawn up a list of all the top buying and selling done by ICICI Pru in September. Jayesh.
So Neeraj, ICICI Prudential, they now manage equity assets in north of $15 billion. And in terms of sector weightages, once again, a trend that we are picking up, financials constitute nearly a third of their portfolio, while the second sector that they have concentration is towards the consumer discretionary space, just over 10% of their entire portfolio. Now, in terms of their September activity, let's have a look at where they increased stake. ITC was the top gainer over there, which they added about 3.5 crore shares, followed by Infosys, Tata Motors, and ONGC. Interglobe Aviation followed over there as well. In terms of the decreased stake that you were mentioning, they have sold stake in 2 of the marquee Tata companies, which is Tata Motors and Tata Steel. Each of them, they have shared about 93 and about 46 lakh shares each. Axis Bank over there. Reliance Industries, Neeraj, is the real pick that I want to point out. Even for last month, they had sold as much as 37 lakh shares, and this month too they have cut their stake by 24 lakh shares. Interesting bit over there. In terms of the shares that they bought fresh in their portfolio, if you have a look at ICICI Lombard, the IPO that they subscribed into, Reliance Capital, Dixon Technologies, this is the other one that I'm picking up. Most of the mutual fund houses, they have actually subscribed into this IPO, and the stock has also given you good returns. L&T Finance, they bought in fresh, followed by BEML as well. In terms of the stocks that made out of that went out of their portfolio, Coffee Day, AU Small Finance, probably higher valuation concerns over there. JP Associates, they completely sold off as much as 1 crore shares, followed by AB Capital and Jindal Steel. That is what ICICI Prudential, the entire portfolio rejig for you.
Okay, thanks a lot for that, Jayesh. So those are some interesting ideas. Avinash, before we thank you, a word on anything that you would be buying this Muhurat trading session, something that viewers can buy into as well.
No, I think we have
with a standard disclaimer, of course.
Yeah. I think we have been looking at Cochin Shipyard, which has a recent public listing, and I think the operating leverage in the business and the kind of balance sheet strength this company displays, I think there's a long way to go. The stock actually trades at around 560, 570 odd, and looking at the kind of order book of more than 3,000 crores plus a very debt-free balance sheet and a complete capex which is going to be funded only by internal accruals, makes us believe that over the next say 12-15 months, this could definitely deliver healthy returns. We are looking at a target price of around 710 here.
Okay, Avinash, we'll leave it at that. Thanks so much. 710. This is something that Avinash Gorakhshekar believes people can buy into at in this Diwali, on this Muhurat trading session from a long-term perspective. Mr. Chokalingam, before we thank you as well, one stock or one idea that you would be investing into this Diwali?
Yeah, I would suggest Gensa Technology. I am basically focusing on beaten down mid-cap stocks rather than stocks in which there is a bubble. So this stock has corrected a lot and trading at substantially less than 1.5 times the EV to sales, which is the valuation given to many mid-sized IT companies in the consolidation. So I believe this stock in next 52 weeks can give a substantial return.
Okay, minutes away from market open. Let's tell you all that you need to know going into trade today. Axis Bank, Bajaj Auto, Wipro, ACC, ICICI Lombard come out with results today.
Oberoi Realty, DCB Bank, Sasken Tech, Hudson Agro and Delta Corp reported strong results post-market hours on Monday. So today we'll see the reaction on all these stocks.
Goldman Sachs sees 29% upside in Emphasis. HDFC Securities sees 36% upside in Sashun, while Motilal Oswal sees a 46% upside in Prime Focus.
In bulk deals, Westbridge buys 1.7% stake in IFP Industries, while Vijay Kedia buys stake in Aries Agro.
Cipla to meet IIFL Private Wealth Management today, and NBCC will meet HDFC AMC today.
And Excel Group to acquire 20% minority stake in Mahindra Insurance Brokers, a subsidiary of M&M Financial. So that's the stock to watch out for. Well, moving on now, Nilesh Shah, MD and CEO of Envision Capital, joins us in the studio. Nilesh, good morning and happy Diwali.
Happy Diwali to you and all your viewers, and wish everyone has a great year ahead.
So Nilesh has come clad for the Dhanteras celebrations, as he usually does, of course. I think you're on a fast. Or
tomorrow and day after.
Tomorrow and day after.
Yes.
Wow.
That's right.
So he's completely prepared for Diwali, Pradeep. Unfortunately, you and me are not.
Well, how is your portfolio prepared for Diwali and New Samvat though? That's what I think viewers will be interested in.
Well, we are long-term investors, so we honestly don't kind of prepare for Diwali. But so I think, but I think the way we see things going forward is that I think it's imperative for earnings to really start catching up over the next year or so. Honestly, it's going to be a very, very important year. And honestly, if you really look at it over the next 12 months, issues like GST or demonetization, should not necessarily be the alibis for earnings to not catch up. What we believe is that, yes, obviously the next year is going to be very, very important. It's going to be the year of earnings. We strongly believe that, the worst is going to be behind for the economy. All the challenges to do with demonetization or GST would have got ironed out. Corporate India is going to be on a low base, so to that extent, performance will be required over a lower base, and I think that's something which is likely to happen. We are in that camp where we see that the next 4 quarters would be 4 quarters of very, very strong growth for corporate India and the Indian economy.
That's heartening to hear, quite frankly, and we indeed hope that happens. Well, the RBI, if was any indication, growth could likely come back in quarter 3 and quarter 4 as well, and this quarter could well be different from quarter 1 as well. Quarter 1 was a washout, maybe quarter 2 could be a decent one. But Nilesh, hold on to that thought. We are perilously close to market open. Just before we do that, I think need to get in the top trading call from our technical experts before we thank them. Gaurav, if you had to bet on one stock for the morning today, which one would that be? Okay, I think we've just missed out on Gaurav, but Hadrian is still there. Hadrian, if you had to bet on one stock for this morning, which one would that be?
Yeah, I'll stick with Tata Motors, the heavyweight. The stock has shown very strong momentum, and actually there is a dual breakout that is happening on the stock simultaneously on the daily as well as the weekly charts. So there's an inverse head and shoulder pattern breakout on the daily as well as a channel pattern breakout on the weekly. So I think Tata Motors is one stock that you can bet on for a short-term conservative target of close to 450 to 460 levels, and keep a strict stop loss close to 443 odd levels.
Okay, so Tata Motors is the stock to watch out for. Thanks, Hadrian, for joining us this morning. Thanks, Mr. Chokalingam, as well. And I wish you both happy Diwali. Well, Dheeraj, we are inching closer to the open. I think a drop of 30 odd points is what SGX has hinted.
Yeah, we'll so probably start on a somber note. Maybe not too much of activity in the large caps, but the mid caps and the small caps will be the interesting ones today. Lots of result reactions, particularly mid cap IT. I keep on repeating this. Do watch out for those set of stocks. Those could be interesting ones in the session today, as also over the medium term. We'll actually talk to Nilesh Shah about that. He's got a keen eye out on that pocket for sure. And then the likes of Delta Corp and a few others could well be reacting to their numbers too. But here are the first trades this Tuesday morning, this Dhanteras morning. We'll start off on a flattish note. So, yeah, no changes whatsoever from yesterday's session. It's absolutely flat for all the 3 key indices, the Nifty, the Bank Nifty, as well as the Sensex. Just no movement. I haven't seen this kind of an open in a really long time. It's as flat can be. Bring up the broader end of the markets and let's see if the mid caps and the small caps are reacting. Well, considering how volatile they usually are, it's a very, very flat start for all the key indices. Well, pull up the Nifty heat map. There'll probably be an even Stevens on the reds and the green. Yeah, almost even Stevens. Don't quite look at the reds because the top gainer is Bharti yet again, but not up over 0.5%, yeah, 0.6%. And the top loser is Wipro ahead of the numbers today, but about 1.5%. Bajaj Finance continues to drag a bit, but that's about it. So it's even Stevens on an absolutely flat morning for the markets. Ahead of the numbers, maybe just pull up 2 or 3 stocks. People need to keep an eye out for these. So Axis Bank ahead of the numbers today may come out post-market hours, but do watch out for this one. Lying flat, dormant though. Bajaj Auto could be an interesting one for the first quarter, if you will, after 4 or 5, wherein the sales growth numbers have been impressive. Let's wait and watch if this one does react ahead of the numbers. And ACC and Wipro lying flat too. What about some of the mid caps and the small caps? Let's see some result reactions at the broader end of the spectrum, because there would be some stocks out there that could be reacting. Earnings reactions for Oberoi Realty, the numbers were actually ahead of estimates, but 2.5% down. Delta Corp, again, numbers slightly better than estimates, but hardly any reaction there, just about 0.5%. So no, not too much of a reaction for a DCB, Oberoi or Delta. Maybe mid-cap IT has a different flavor. Persistent Systems, good numbers, 2.5%. Sascan, extremely strong EBITDA jump, and that one is of about 6.5%, 564 and counting. So good going for Sascan Communication Technologies in today's session. Some brokerage notes, Goldman Sachs sees about a 29% upside in Emphasis. That one has started off about 1.5% higher. So good going for that one. And there was, I think, Motilal Oswal on Prime Focus. Yes, this, wow, look at that move. 46% upside is what they see, but Prime Focus is up whopping 20% in the session today. Clearly, from amongst the mid-cap names, this one is the stock of the morning. Pradeep, anything that beats Prime Focus?
Prime Focus, actually, volumes have already crossed the 5 days average, so that is another interesting bit of information. JP Power has moved up by 10% on the news of five big bidders interested in this stock. And also you have JP Associates moving on the back of the same news, up 3% now with strong volumes. Well, DCB may not have reacted to the good numbers, but Federal Bank keeps moving up with good volumes this morning. In fact, volumes have again crossed the 5 days average. So maybe there's a big buyer at this counter active in the morning trade. Federal Bank up just 1%, but look at the volume. Tata Tele is up 5% now because the circuit filter has been brought down. Jain Irrigation is up 2%. That's another stock in news. Make Money Organics, again with good volumes. Aries Agro, another stock we have been tracking, up 13% now with excellent volumes, so to say. And so, well, these are some of the stocks which have moved up and with excellent volumes in today's trade. So focus definitely on mid-cap and small-cap.
There's one very interesting thing that we've noticed the last 20 days. We may talk about heady levels, etc. But a brokerage note on a mid-cap or a small-cap stock, a bulk deal by some of the interesting names, and by interesting, I mean names which are evoking reactions these days. The reactions on mid-caps and small-caps are strong and they are lasting. There seems to be real strong interest to the small-cap and the mid-cap end of the market currently. Dangerous, or you think par for the course?
Well, as long as there is merit in each individual idea, that's fine.
Yeah.
But I think we're seeing this kind of phenomena spread to a larger universe of a lot of the, and especially on the small-cap side. I think somewhere the mid-cap seems to have been a bit sideways and sluggish for the last 2 or 3 months, and that's getting reflected in, say, the mid-cap index, whereas the small-cap index continues to make kind of new highs. And I think it's symptomatic of the bull market that we are in. It's a bull market fueled by liquidity. There's a lot of participation by domestic players. Any specific name of a brokerage or an investor which gets attached to a stock, and there's a leap of faith which the broader investment community takes on that. And you see really liquidity chasing that name.
Yeah.
And you know, on an overnight basis, some of these stocks go up 20, 30, 40%. The challenge is that in this environment, most people are really focused on a target price, really, rather than saying what's the underlying value. And I think, yes, as long as the music is on, you know, this will continue. It's only when the music stops will we see the other side of the mid cap and the small cap, when liquidity gets sucked out. You know what really happens, or when there's lack of buying, then really what happens. But so this is what it is.
From this Diwali to next Diwali, do you see the kind of events that may actually you know, constrain this amount of liquidity which is flowing around?
Well, what is likely to happen over the next 12 months or so is, I don't think we should bet on global liquidity at all. Okay, I think global liquidity, we've seen really over the last month or two, global liquidity gradually withdrawing itself. So virtually on most days, we're seeing the FIs being net sellers. What is going to happen over the next 2 or 3 months is basically the Fed is going to again hike rates. The balance sheet adjustment of the US Fed is going to start trickling in. So I think my sense is that over the next 12 months, we should really not expect global liquidity.
But we are driven more by domestic liquidity.
Exactly. So what's really happened is over the last couple of months, it's domestic liquidity which has really taken center stage. And that's something which we believe will sustain. So we still continue to bet a lot on domestic liquidity. However, having said that, I think the big event for the next 4 quarters is going to really be earnings momentum. What we clearly see is basically the economy doing a lot better. We are a lot more positive on the investment cycle. We are a lot more positive on some of the sluggish activity in housing, for example, which is there right now. We believe that's something which will start gathering momentum in a quarter or two. The positives of GST will start playing out again in a quarter or two. So to us, the next Samvat is all going to be about earnings acceleration. It's going to be about sustenance of the domestic liquidity, and it's going to be where global liquidity could be the big risk over the next Samvat.
Well, that's interesting. This morning we had a chat, the editorial chat that we had done today, also referred in brief bit to Mumbai real estate and how these stocks are on a bit of a tear with all that's happening. But a couple of pockets that I want to talk to you about, Nilesh. For the longest time that I've known you, you have identified the right apples in IT. You stuck with some of the interesting names out there too. This quarter seems to be showing a bit of a turn for mid-cap IT in terms of at least the delivery that they've done in the quarter. Is it too early to judge whether mid-cap IT can really turn the table? Because valuations are in your favor.
Yes.
They needed the earnings delivery.
Yes.
Do you think that will happen?
Totally. We are in that camp where you're going to see earnings growth to be kind of, in double digits in the IT pack overall. Okay. And that's again stemming in from what the companies are saying, a lot of the adjustment process that they have done. So if you really look at this quarter, okay, TCS basically said we are preparing ourselves for a double-digit growth. Okay, if you look at some of the tier 2 IT companies, you're clearly seeing them exercise some levers. So earlier on, the levers used to be about upping the utilization rate and things of that kind. This time around, you're also seeing them rationalizing on their selling and marketing expenses. Okay, you're seeing them let go of the underperformers within their overall team. Okay, so you're clearly seeing that Q1 is when Q4 of last financial year, Q1 of this financial year is when basically margins have bottomed out.
Okay.
This Q2 we are seeing, especially in some of the mid-cap names, you're seeing an uptick in margins.
Yes.
And if you listen to the earnings calls of some of these companies, there are only one or two companies which have come out with these numbers, they are extremely optimistic on margin recovery over the next 2 quarters.
Interesting.
Okay, so I think that is very, very interesting. As we step into the next financial year, we clearly think that the revenue growth is going to be in low double digits. That will further bring about a margin uptick. So overall, what we think is that come next financial year onwards, we are very sanguine and we believe that the earnings growth in mid-cap IT is going to be in double digit. It's something we have not seen for the last 2 or 3 years, but it's something which will start shaping up, number one. Number two, valuations are at a 50% discount to the broader mid-cap index, the valuations of IT companies. 3, a lot of companies in the IT pack are putting cash to work by doing aggressive buybacks, okay, which I think is very, very positive. It reminds you about corporate America, which 3-4 years back went on an aggressive buyback spree. And you're basically seeing now the impact of all of that in terms of their market capitalization and uptick in stock prices. And we think that the mid-cap IT or the IT pack in general is at the cusp of such a phenomena over the next 4 to 6 quarters.
Wow, that's the most bullish argument that I've heard on IT, but when Nilesh speaks about it, you stand up and listen. Do watch our mid-cap IT. I think a conversation that you can't afford to miss today would be persistent systems. At 9:50, Anand Deshpande would be joining into, so do stay tuned for that. The other quick pocket, one quick question from my end, is the commentary that happened with Rajiv Jain yesterday. He spoke to us post his results, and while I know the market may be slightly disappointed because of the higher OPEX and therefore the corresponding fall in profits, but Rajiv said that they are going to do this for the next 2 or 3 or 4 quarters and then it will stabilize. But he said that compared to Q1, where we were guided for 25% PAT growth, we are upping our profit guidance, and we believe that consumption is looking very robust for our growth numbers to be better in the quarters to come ahead. Now, Bajaj Finance is an exception to the rule maybe, but can the others follow suit? And therefore, would the NBFC, consumption-based NBFC's growth, would it stay for the next few quarters?
Well, it looks like. I don't think growth is going to be a challenge for them. I think for the entire NBFC pack, especially for those companies or those NBFCs which are focused on consumer financing, I don't think growth is going to be a challenge for them if you're talking of growth rates of 20-25%, which could be growth in terms of the AUM growth or the disbursement growth and all of that. I think that's quite possible. The challenge is going to be really in terms of the profitability. There could be challenges in terms of trying to preserve margins. because competitive intensity is going up. So if you really look at that pack, for example, now HDFC Bank has a dedicated NBFC, HDB Financial Services, which is focusing on that. Now look at the cost of capital of somebody like HDFC Bank. Look at their cost of capital, look at their size, look at their access to technology, look at their execution prowess, look at the reach. Okay, all 5 ingredients that you would look for a business plan to succeed are there with your competitor. Okay, so one needs to keep that aspect in mind, that it's quite possible that you could see yet loan growth happen at that pace, but there would be some kind of impact in terms of margins, and therefore it may not necessarily translate entirely to profitability. But you have to keep in mind again for NBFCs is that they're trading at fantastic valuations, so they go ahead and raise capital at those valuations, yeah, which in turn adds to the PAT growth, because there is no interest cost which you pay on it. So the real measure will have to be A, the credit cost, and B is the ROE. Can you sustain that ROE? Because when you're raising capital at this kind of valuations, it adds to your net worth, and can you kind of generate similar return ratios? So that, I think, is going to be a key parameter or a key variable to watch out for.
You know, after Bharat Financial's deal, the other microfinance stocks have also started to move up. What's your view? Do these companies really have a sustainable business model, or will they all be looking for suitors going forward, and that is really the play?
Oh, absolutely. I think microfinance companies, honestly, on a standalone basis, have no business model. Okay, I think it's a very vulnerable business model to have. So if you really look at it one by one, every MFI or the leading MFIs have converted themselves to a bank. Okay, so that is one. If you look at, say, the top 5, okay, 2 have got acquired. Bharat Financial this year, and same time last year, Gram Vidyal got acquired by IDFC Bank. Okay, so these are the 2 things which got acquired, and then Ujjivan, Equitas, Bandhan, etc. All of them have converted themselves to a small finance bank or a full-fledged universal bank. So clearly, I think the writing on the wall is clearly there, that there is really no sustainable standalone business model for a MFI. And it's important that they become part of an overall platform like a bank.
But small finance bank is a model that will sustain.
Well, it is to be tested. Honestly, it's still early days. The challenges of setting up a bank and making it profitable are there. There are costs of compliances and all of that, and then there are certain kind of requirements that you have to make, the statutory requirements, which could in a way depress ROE. So one has to see. I mean, yes, is there a case for a bank, for a small finance bank? Yes, the answer is yes. But one has to clearly see how good the execution is going to be over the next couple of years or so. But it's better to be an SFB than to be a standalone microfinance. On a relative basis, I think there is a case for a small finance bank.
Okay, by the way, JP Power and some others are up in the green today. Jain Irrigation, Indian Hotels, BEML, amongst the other stocks that are doing well. Nilesh, before we thank you, quick thought, not getting into specific stocks, but if you were to bet on one theme from this somewhat to next somewhat, would it be capex intensive plays? Would it be IT, as you sounded, or something else?
Well, IT is something which of course is there, but it's not necessarily, it may not be completely big bang. Yes, it will do well. But this whole pack, I mean, our premise rests that the economy is going to do better, core sectors are going to do better. So I think three opportunities that we look at. One is basically, a quality real estate play, a company which is probably into home development or property development. I think RERA is basically positive for the large organized players. So I think that's one important theme. It's still a sector which is kind of looked upon with a lot of suspicion, and I think that's where the opportunity is. Number one. Number two is, again, cement. Tier 2 cement stocks have corrected, okay? And we believe that a lot of the pressures that they have been facing with GST, increase in raw material prices, etc., I think all that will get kind of evened out once the demand starts picking up. So that's second area. Third is, because we are positive on core sectors picking up, a lot of companies which are into the fast-moving industrial consumables, companies which make abrasives, refractories, etc., that's a pack that we like. So these are the 3 kind of ways to really play the resurgence in the Indian economy over the next 4 quarters or so.
Well, let's hope it comes about to be true and in a better form than what we are envisaging right now. But Nilesh, thanks so much for joining us today on the Dhanteras Day and giving us your thoughts. Wish you and your team a great Diwali.
Thank you. Thank you, Neeraj. Thank you, Pradeep, and all the viewers of Bloomberg Quint.
Thanks so much for joining in. Okay, let's slip into a very quick break. But up next, we continue the festive discussion. Nilesh Gupta of Vijay Sales will be joining us to talk about what to expect from this month, this month. We also tell you what to expect from the 19th Communist Party Congress, asked Jing Pan of IG Asia, and we decode earnings of mid-cap IT, especially Persistent Systems, with Anand Deshpande. All of that coming up. Stay tuned.
It's time for new beginnings,
new opportunities,
and new dreams.
This Diwali, look at wealth with new eyes on Bloomberg Quint.
Keep up with everything gold in all that glitters.
The magic of mutual funds with the best money managers in the country.
We get you the top stocks
for the new Samvat.
Get the long view on Sal Mubarak.
Learn how to let your money do all the work.
On Thank God, it's Diwali.
Catch up with the bulls, the bears, and all the other animal instincts
At our
Diwali party.
Take a different approach to Lakshmi Puja this season.
Join Bloomberg Quint.
For a rich life and a life full of riches. Happy Diwali.
Happy Diwali.
Happy Diwali.
Happy Diwali. Happy Diwali.
Happy Diwali.
Your chance to get some personal advice from veteran investor Ramdev Agrawal.
Investing is about buying the right asset class at right price. I have been able to create good amount of wealth through my career by believing in power of quality, power of focus, and power of compounding. I will share all my experiences with you.
Write to us now or send in your queries on our Twitter and Facebook pages. Watch me live in conversation with Ramdev Agrawal.
Ask me what you want to know from me. Only on Bloomberg Quint.
Welcome back. You're watching Indian Open. It's Dhanteras today. Diwali is a day away, so if there's any last-minute shopping to be done, it's now that you go ahead and do it. We're hoping that the footfalls in stores like Vijay Sales have improved as we have gotten into the thick of the festival season. But to help us understand what exactly is happening on the ground, Mr. Nilesh Gupta, Managing Director of one of Western India's largest consumer electronic exchange, Vijay Sales, is joining us. Good morning. Happy Diwali to you, Mr. Gupta. How is it looking? I know the early weeks there was a little bit of trepidation about how good or bad this festive season would end up being. What's it looking like to you?
Good morning, everybody, and wishing all the viewers a happy Diwali in advance and happy Dhanteras for today. I think we were also a little skeptical initially when the month started, how the Diwali will fan out, because we had a pre-GST in June Diwali sales, as good as Diwali sales. But the way it has panned out from last weekend and even this weekend which went by, I think we are on a very good path. I am seeing a growth of at least 15% this year over last Diwali. So I think it's a very, very good and positive sign.
15% over last Diwali is certainly good news, sir, because last Diwali we hadn't even gone through the whole demonetization, GST and all of that. So if you're doing better than last Diwali in at least double digits, that should be, I guess, the best you can hope for.
Yes, in fact, it's a little surprise for us also. But I think the basic reason, I'll give you two reasons why this is happening in consumer durable industries. One is consumer durable are something which people cannot live without. So whether it's GST issues or whether it is demonetization, people need to buy mobiles, people need to buy air conditioners, televisions and everything. And the second major factor is the EMI availability. Year on year, we are seeing the business on EMI is increasing. And year on year, the brands and the retailers like Vijay Sales, we are trying to give better EMI options to the consumers. Like this year in Diwali, if you see, there are so many options where a customer does not even have to pay any down payment. He's just taking away the product free or a token down payment and balance in EMI. I think these two factors have contributed to the success story of consumer durables.
But that's a little bit like creating artificial demand, sir.
I would not say artificial demand. Technology is also changing and improving. You see, this year we are seeing a lot of take from the consumers on the large screen televisions, and especially on the premium 4K and OLED. Like last year also OLED was introduced, but it was at a very high price and nobody's interest was there. But this year we are seeing a great demand in the OLED televisions.
Sure. I wasn't speaking product
4K.
specific, sir. I was speaking this whole thing about, no EMIs, no upfront payment. All of these schemes tend to boost demand when there isn't genuine demand. That is what I was referring to as artificial demand, sir.
No, but they do see, ultimately that is what all marketing is all about. And if you can make the things convenient for the consumer to buy, I would not call it as the artificial demand. There has been a pent-up demand in the consumers for upgrading their electronics, and this helps them to do that. Yes, definitely you are giving them a fillip to buy it because of the EMI is there. So in a way, yes, we are trying to boost the demand, but I think that's all the industry is all about.
Who's providing these EMI schemes, sir? Is it largely NBFCs that you've tied up with, or are banks also in the fray?
Now, see, that is another second thing which has changed in the last 1.5 years is not only NBFCs like Bajaj Finance and Capital First, but now even the credit cards are offering these EMIs, and they have also tied up with the brands to offering no-cost EMIs. So all the top leading credit card companies like Citibank, ICICI, HDFC, they all have tied up. So I think all in all, and I think this trend was basically initiated by the mobile companies in order to boost their high-end sales. They came out with a long tenor, 24 months, zero down payment EMIs tied up with along credit card companies, and now it has trickled down to the consumer durables also.
Nilesh, good morning. This is Menika here at Bloomberg Quint. What percentage of your customers would be availing of schemes like this? Do you still see people coming to pay you cash down, or is the day and age of cash slowly going away?
Good morning, Menika. Cash has become a taboo word now. So I think now basically 90% of the people are buying on EMI or credit cards, and in fact, paper finance, like Bajaj, NBFC's finance is nearly 50% of the business, which 3 years back was hardly 20%. So that has seen a very great uptake. And now balance the people, if after 50%, the 40% which is remaining out of the 100 is going to credit card, which invariably most of them either they're buying on EMI at the time of buying, or possibly later on also they convert with the banks into EMIs. So I think the cash business is more or less gone away from our industry.
Okay, I'm contrasting what you've been telling us about an expected 15 to 20% increase in sales this festival season over last year with a story that is just sort of making the waves right now, which is that CAIT, the Traders Association, says that in fact they've seen sales drop 40% in the days ahead of Diwali. Now, I'm sure that this is apples and oranges. They're talking about other markets. You're talking about electronic goods. But can you give us a bigger picture view? Are you seeing sluggishness in the retail trade? Are you seeing manufacturers forced to offer deeper discounts, big price cuts to be able to bring consumers into stores besides the EMI type of schemes that might be a lure?
See, in fact, the EMI schemes also is a sort of deep discounting, because at the end of the day, the consumer is getting an interest-free EMI, but somebody, manufacturer and the retailer put together, is paying the interest on the part of it. So and specifically another thing which I would want to clarify over here is what I am trying to say is, since I am present in the metro markets, Delhi, Mumbai, Gujarat, major cities, and Pune. So I think what I am telling you is reflecting of these markets. I don't have much this line of action of what's happening on the rural market. So, but in these markets, definitely the uptake has been there. And as I said, in consumer durables, even during the demonetization, we had a 1-month lull. And afterwards, it went back to normalcy. So this year, although we were also skeptical, that we were thinking either there'll be no growth or maybe a single-digit growth. But last 2 weekends have changed the In fact, had I talked with you all 2 weeks before, even I would have been skeptical of 5 to 7% growth at the max. But last 2 weekends which has happened, and even yesterday which went by, I think that's what has made us positive that we are expecting a 15% growth at the end of the month.
So I'm guessing it was a good September and a decent October, Nilesh. This is Neeraj here. Good morning. Just one question on what categories are doing well over
Good
the
morning,
others.
Neeraj.
I mean, are coolers doing better than air conditioners? Are refrigerator sales picking up? Is there a categorization that you've seen within your stores?
See, if you ask for categories, at the top of the category which is doing the best is the televisions, and especially the large screen and the 4K and OLED televisions is seeing the maximum growth. Now, this is followed by the mobiles and then refrigerators and washing machines. Air conditions did pick up very well initially in the initial month, but in the last week, there has been continuous downpour in Mumbai, you see, and which has changed the weather. So, air conditioner has got a little sluggish. We are expecting in case the rains go away and temperatures rise, then we'll see once again a slight increase in the air conditioners. But overall, all the categories are firing well right now because the thing is, even today, although we have progressed a lot, but the mindset is, so we have to buy something new. And what else to buy? Let's go and buy electronics because gold has become very expensive. And electronics is something which people use and they're always wanting it. And I think no member in the family says no to electronics. So I think the general consensus is if you have to buy something new after clothes, let's go and buy electronics. And clothes, what has happened, if I'm not mistaken, is people are buying apparels throughout the year. They are not waiting, unlike a decade back where people used to buy clothes only on occasions. Now, that's not the case today anymore. So I think at the end of the day, people are buying electronics and that's good news for us.
Nilesh, we're going to leave it there. On that note, if you're not going to pick the first G, which is gold on Dhanteras, do pick the next G, which is gadgets on Dhanteras, is the big pitch coming in from Vijay Sales and Nilesh Gupta. Nilesh, have a great Diwali. Thank you very much for joining us here on Bloomberg Quint.
Thank you. Thank you very much.
The next story we want to move on to is a story that we gave you a heads up earlier this morning, and that has to do with the 19th Communist Party Congress that will kick off in China starting tomorrow. It is a meeting that will decide on the leadership of the world's largest country as well as the second largest economy. For some insight on what to expect in terms of key announcements and announcements that can have an impact on the global economy and global markets, we're joined by Jingyi Pan, the market strategist at IG Asia. Good morning to you. If you could give us a sense of what you're expecting in terms of key economy and market-related announcements during the course of that 19th Congress.
Hi, good morning. So, yeah, like you say, I think this 19th Party Congress is going to have quite a bit of widespread implication for growth in China. Of course, to a certain extent, the market is really focused upon the political aspects from this meeting, and this includes some of the personal changes and maybe even the announcement of a protege to the current president, Xi Jinping. I think that itself is what the market truly is looking for at this moment, but of course, on the end of what's going to impact the market, I think what this meeting itself is going to be is the setting of the tone for the next 5 years. So I do think that the market will closely follow the rhetoric coming through from the meeting, whether there's going to be a focus on the 6.5% growth target until 2020. And in addition to that, some of the reform plans, but truly only from the top level at this current moment before we do see more of this in November itself when the working committee gets together.
Let me break it down into some smaller, shorter-term developments. If we were to hear, and do you expect that we will hear the replacement of the current central bank, current governor of the central bank in China, the PBOC, and if that were to happen, do you expect that to have any kind of short to medium-term impact across currency markets in the world?
Well, I do not really have a take on whether there's going to be a replacement at this current moment. But in terms of the implication for the market, I do think that the market itself generally do see the PBOC broadly aligned with what's the plans in terms of reforms and also deleveraging for many of these sectors. And in that sense, I think that you will actually see more more continuity rather than any specific shocks over there.
The other big expectation has to do with the consolidation of power, in Xi Jinping's hands. Now, would the markets read this as a good thing for the Chinese economy and therefore a good thing for the global economy? Because several economic observers of China have said that his record when it comes to the economy has not necessarily been consistent. What's your assessment?
Well, I do think that the current administration has been doing quite a bit of a good job, I would have to say, whether in terms of meeting this growth. Of course, a lot of this growth that we have been seeing in China, demand pick up internally and externally, that itself is also due to the fact that the global economy has been recovering. But in terms of opening up and reforms aspects, we do see the fact that the across the bond market, the currency market, and even the equity market, the stock connects, that itself, I think, is quite a good progress in terms of how the country has progressed. So I do think that in that sense, the consolidation of power should be taken as a positive sign, and it's something that the market is already expecting. Where on the other hand, it's really about what the plans are going to be for moving forward, that is going to be quite crucial towards the sectoral place there.
All right, so let me ask you two specific economic policy related questions. One is, do you expect there to be a de-emphasis on GDP growth rates? And if that is the case, then you expect growth to slow at all here onwards in China? That's the first part of my question. And the second is, do you expect there will be serious and significant moves towards deleveraging, especially the state-owned enterprises in China, and again, any kind of ripple impact that might have on the global economy?
Well, certainly, in terms of, so I'll go on for the first part first of the question. I do think that in terms of the focus on growth aspects, at least until 2020, I don't think that the current administration, the newly elected committee themselves would ditch that 2020 centennial goal to double the growth figures, and in that sense, I don't think that they will deviate too far from the about 6.5 growth rate, and that itself, I think, is pretty much something that is achievable, at least for this current year and for the upcoming year as well. But moving forward from there, I think it's about more what could be higher sustainable growth, and it depends a lot on whether the new administration is able to focus on policies and new growth areas to help to stimulate the China's economy. And with respect to the second question, with regards to deleveraging, I think the fact is that as we have heard from the PBOC Governor Zhou Xiaochuan over the weekend, and indeed that is one of the key concerns for the current administration, and this is something that shouldn't really be a surprise for him to mention, and that is a continuing item to look into. Having said that, I think there has been some progress made towards that, and a lot of this shift, for the dual track economy towards the private sector side. So the steady deleveraging in the SOE sector has been seen, and moving forward in terms of whether we are going to see that actually really impact the economy, I think they are doing a good balance at this current moment and really making good use of the current growth situation to conduct some of these deleveraging exercises that has helped. So I think they will continue at this current rate, and that itself, I don't see any risk at this moment. Certainly, I do think that the market itself is not going to see quite a hard landing situation for the Chinese economy anytime soon.
All right, that's a cautious outlook there. Xing Pan, thank you very much for joining us this morning. Looks like everybody's playing their cards or holding their cards close to their chests, waiting to see what develops at that Congress.
Yeah, what did you, quickly, Menka, what did you make of all of this?
No, the 6.5% growth rate target that is supposed to hold till 2020 will hold. That seems to be the consensus everywhere, and that's exactly what she just told us as well. She doesn't see any big changes there. A shift towards more sustainable growth, that has been the story with China for the last few years, so I'm not telling you anything new that you don't already know. We already heard from the PBOC head, on the weekend regarding the further need to delever in the Chinese economy. That had some impact on the currency as well, and yields in China. So I suppose they will stick to that track. I think this will be as important an economic or a geopolitical event as it will be an economic event. We've seen China make moves in the South China Sea. We've seen the standoff in Doklam with India. So I think any consolidation of power for Xi Jinping will have bigger implications geopolitically than just economically, especially because they now seem to be on the more stable, medium-term growth path for the Chinese economy. So that seems to be the broad case.
Okay, moving focus to earnings now. It's been a decent day or a decent overnight of earnings. Persistent Systems reported a set of numbers for the September quarter with profits up 10% on a quarter-on-quarter basis. To give us a fine print of the earnings for the quarter gone by, we are joined by founder and CMD Anand Deshpande. Agam, of course, tracks the counter closely. John's over. Agam, over to you.
Well, it's been a steady quarter for Persistent Systems with both the top line and the bottom line ahead of consensus expectations. To take us through these numbers, we are in conversation with Dr. Anand Deshpande. He is the founder and CEO of Persistent Systems. Mr. Deshpande, thank you for joining us. Well, I am witnessing about a 20% growth, over 20% growth on a sequential basis when it comes to your digital revenues business. And, you know, we've seen the contribution in the total revenues as well as increasing. What is it that's driven this growth? And can we expect Persistent Systems to sustain this growth as we go into the next couple of quarters as well?
So thanks for inviting me here. And as you know, the revenues this quarter were 118.10 million, which is a 4.5% Q-on-Q growth. And the PAT was 826 million rupees, which was a 10.9% quarter-on-quarter growth. As you pointed out, the digital business grew about 21%. And some of it has come in through the acquisition of Parks that we made last quarter, which contributed to about 9% from the 21% came in from Parks. Parks has been a good acquisition for us. It's part of the Salesforce ecosystem, and they supply in the DACH region, which is the German-speaking European regions. And we expect that the digital business is doing well. We have a lot of activity in the data digital IoT across the company. And many companies are focusing on their digital transformation story as they become software-driven businesses. And we do expect our digital business to deliver us about 15 to 20% quarter-on-quarter growth for the next 2 quarters as well.
Mr. Deshpande, I've been reading a lot of brokerage notes, and a lot of them have been mentioning the strength coming in your enterprise business as well, which has grown around nearly 11% quarter-on-quarter. And considering a third of your revenues come from that segment, we'd also like your outlook on this particular aspect of your business in the second half this financial year. And what will your partnership with IBM play, or what role will it play when it comes to this specific segment of your business?
Correct. So as we have discussed this in the past, right? So the big change that is happening in this sort of IT business is the fact that the effort required for the same work is going down. As a consequence of that, a large number of companies, enterprises at large, are starting to become software-driven businesses and are running their next generation of digital transformation story around the digital business. We have made a focus of going after these kinds of companies in healthcare and in the sort of financial services areas where companies are starting to deploy next generation technology, which is where our growth opportunities are. Many of our partnerships with IBM are also leading us into IoT related businesses, which are all being classified under the enterprise segment. So our enterprise segment growth is coming in from enterprises buying new generation technologies and solutions, and not just IT modernization projects. And so it's very unique and different, but we are quite excited by the growth that we see in this segment.
Mr. Deshpande, there are, however, some concerns over challenges with respect to your independent software vending and in core intellectual properties. How would you address these concerns?
So I think, as I pointed out earlier as well, this is again related to the same fact that the effort for the work is going down. And many of our product companies are very sophisticated in the way they build their products. So as they look at next generation of product development, you need fewer people to do the same work. So while we continue to work with a large number of them, and we do have sustained relationships with them, the project sizes on those projects are shrinking, which is natural and is expected to happen. So that has been the main reason why the percentage has gone down. Also, as the enterprise percentage grows up, relatively to the whole market, our ISV segment will look like it's shrinking a bit. But we have very healthy relations with some of the market leaders who are building next generation products.
Okay. Also, your growth in your Accelerite business has been relatively slow, and this is in relation to your other segments. Can you talk to us about the kind of trends that you're witnessing in your products and solutions business?
Correct. So there is some IP seasonality that you will see in the second half coming in, especially in Q3 for us, which should give us better numbers on the seasonal IP revenues that we are expecting from both our Alliance and from the Accelerite side. Some of the Accelerite portfolio of products that we have right now are starting to in trials, and the pipeline on that is quite healthy. So I do expect a better H2 for Accelerite and for our IP portfolio. And by the time you look at us next year, you will see that the IP contribution is better than what it was the previous year.
Mr. Deshpande, it was a pleasure speaking with you. Thank you very much for your time.
Sure, my pleasure. Wish you all a happy Diwali.
Happy Diwali, sir.
All right, that was Agam in conversation with Persistent Systems. Sorry, you were going to say something?
No, just that. I mean, the conversation, the stock has of course come off, but it's just the trend that we're seeing in mid-cap IT, and Nilesh was also talking about that, Menka. And
I heard him just say that he thought that there was an up move there.
Yeah, he thought that mid-cap IT is at the cusp of a really good revival, aided by the fact that the valuations are at a 50% discount to the mid-cap index, and the companies might show double-digit growth at least. So it should be an interesting next few quarters for mid-cap IT if indeed they manage to do that.
All right.
So it should be interesting.
I think we're almost out of time. So
Yeah.
we're got to wrap it up here on Indian Open.
Yes, we are going to wrap it up on Indian
You
Open.
want to quickly check on how markets are doing right
News
now?
that the markets are flat as flat can be. Just that select mid-cap names, particularly from the NBFC space, seem to be doing okay. The likes of Edelweiss, Diwan Housing, Max Financial and Motilal Oswal are amongst others, which seem to be doing okay. But even the mid-cap space is very quiet. The top gainer is JP Power, 10%. After that, it's about 3.5% apiece for almost all of the names. So it's a very quiet day of trade on Dhanteras.
I suspect it's going to get quieter as we go into the long weekend.
Yeah, well, 100%. You hit the nail on the head. Let's see if gold remains quiet or not.
Well, some of us have to continue work. We're going to take a quick break here, but we'll be right back with the F&O show. So stay tuned to BQ Live.